is the company in focus right now. Shekhar Patel, MD of Ganesh Housing, is joining us. Mr. Patel, you had a good Q3. Your profits have gone up very sharply. But I want to understand what's the growth which you are aiming at on a sustainable basis. We've seen almost 23% growth last year, this time round versus last year. Do you think, and profitability is also in equal proportion? Where would you like to see it sustained from here on?
As you know, the next 10 years are for India. I think Indian economy will become $8 trillion economy in 2030, and real estate sector currently $300 billion. It will touch somewhere around $1.2 trillion. So we have focused on these numbers, and by these numbers we have worked out our business strategy for next 6 to 7 years. Yes, our profits will grow. We are trying to grow our profit in the range of 20 to 25% CHIR annually for next 6 to 7 years.
But sir, I wanted to understand what could the company, let's say, revenue and profitability look like 3 years from here on, because a lot has happened in Gujarat in terms of development, right from GIFT City, etc. All of this has started showing in the numbers, and what should be the revenue profile, let's say, 3 years out?
As I said that we are planning for 20-25% CAGR every year. So I think we'll try to cross that barrier 20-25%, but we'll definitely grow by 25%.
What about your profitability? 25% growth is what you're aiming at. For next 2 to 3 years ahead, what kind of profit numbers you have in mind? Because your margins are pretty high right now.
Yeah, because currently we have two main portfolios. One is development, one portfolio, one vertical is land buying and selling. Current in our balance sheet, current main income revenues are coming from land buying and selling. In that business, the returns are always high in compare to the investment, and in the construction business we are getting 30 to 35% return, and in the land business sometimes we are getting more than 50%, sometimes we are getting more than 100% returns in the land business. That's why our CAGR our profits are in the range of 50% of our sales.
I want to understand, how are you managing 75% margin in Q3? You're saying 50% will be the profitability on average. What is the key point? Are you buying raw land extremely cheap? What is the value addition that you are actually able to garner and manage such high margin?
We are buying land since so many years, and we have somewhere around 500 acres of land bank in and around Ahmedabad. So our initial investment can be 3 years back, can be 5 years back, can be 7 years back, and some lands currently we are selling. Maybe we are holding it for 10 years, maybe we are holding it for 5 years. So that's why the profitability is looking very high in the land business.
Okay, point taken. Profitability is high because, of course, the cost price was much lower. Thank you, sir, for making time and speaking with us. Appreciate you joining us on the show at the moment. The stock of granular